Welcome back. I'm Pratap here. Today is 26th March 2025. In this video, I'm going to evaluate the performance of high liquidity zones generated in our previous end of the day report. Even before that, all of you please note we are providing complete free training on supply demand zone price action. And you know it is a highly expensive training course, but we are providing complete free training. And all the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. In this YouTube playlist, I kept all the training lessons. You just scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to my training instructions provided at our Telegram channel. I provided the link to our Telegram channel in this video description. So join at our Telegram channel. At the top of the Telegram channel window, you can find pinned messages. Go to the pinned messages. And one of the messages are having all the training instructions. So please learn this course according to my training instructions. Then you will become a very good independent trader in the coming months. Please make use of this opportunity. Now let's get into performance evaluation of the high liquidity zones identified from our yesterday's end of the day software report. So yesterday our software report identified 13 high liquidity zones from daily and 75 minutes time frame. Out of these 13, we got trades from 3 stocks and we got 4 successful trades today with very good ROI, intraday ROIs. So let's focus one by one. First one is Berlasoft. Our software identified Berlasoft as a drop, 3 base candles and a rally candle. This is a 75 minutes high liquidity zone. And this 75 minute zone we fine tuned with 15 minutes time frame. And look into the 15, you have a drop candle, you have a base candle, and we have excellent rally candle with gap up, with a pro gap. And this 15 minute zone again fine tuned with 5 minutes time frame. So in the 5 minutes you have a drop candle, 2 base candles. Actually this is a medium size candle. Generally we keep medium size candle also part of the base. But risk management point of view, see from where imbalance started. Imbalance started from this candle. Earlier prices, see here, moved in a balanced way. All of you please observe this point. It's a very, very important learning. And also if you observe on this point, you get a lot of good trades. How you will understand one more stock in this, I will explain. Sometimes you can compromise and you can draw the zones. Already I kept one video. How to compromise and draw the zones, one of the earlier HLQ analysis videos. I kept that video in a playlist, important strategies and analysis playlist. If you go to the playlist, you will identify how you can compromise and draw the zones. Where you compromise, at leg-in you compromise. That I will explain in one of the stocks. We got a very good trade today. But before that, you observe how I am drawing. First, always I look into where prices are moving in a balanced way. After the balance, is there any imbalance is taking place? I give importance to that. If the imbalance is a medium size candle, sometimes what happens, the imbalance starts and then immediately the candle time will be completed. That's why in the next candle you see a huge leg out candle. But really the imbalance started from the previous candle. So that way what I do, I draw the zone only in this balanced area. Prices moved in a balanced way. What is the meaning of balance? Prices are moved in a narrow range. First lesson, lesson 1.1, a very important point I have explained. I don't know how many of you seriously observed lesson 1.1, the most important point. Even in that lesson itself I told, this is the most important point. What is that point I explained? When demand and supply are equal, prices will be moving in a narrow range. Do you remember that point? Our entire supply-demand zone success story is based on that point. Initially, prices will be moving in a narrow range. That is what, see here, within this narrow range, prices moved. Then lesson 2 you learned. After that you learned your lesson 1.2, 1.3, that is about candles, different structures. But lesson 2, I always say lesson 2 is my favorite lesson. Why? In lesson 2 I explained prices will be moving in a narrow range. After that, that is called balanced. Prices are moving in a balanced way. After that, imbalance will be started due to exceed in the demand or due to exceed in supply. That is a clear indication that institutional participation is taking place. See, the actual institutional participation started from this candle and then continued from this candle with a huge high explosive leg out. Generally what we do, we keep medium sized candle also part of the base if there are earlier base candles. But because of that, intraday point of view, risk management will be very high because of medium sized leg candles. If you identify the balance structure and if that is the area, if you draw the zone, then you get a good trade opportunity from this area. Second thing, your risk will be minimized and you get better profits. Okay, anyway, here we have a drop candle, 2 base candles, medium size candle. We avoided as part of the base because the imbalance started and actual leg out is continued here. So this is the way we want to plan our trade in this area. This is the fine-tuned 5 minutes area. See, today what happened? Prices entered into this area. We got the trade. Of course, prices went deep into the distal line, just touched or maybe 5 paisa, 10 paisa below the distal line. It reached and then sharply it moved up. But our 15 minutes target zone is very, very far away. Somewhere here. Rally base drop, you can draw your 15 minute zone for your target point of view. But unfortunately, today prices did not reach. And here, have you noticed these rejections in this area? More than an hour, almost an hour. Prices stayed here only. Probably this is the area you have to realize. That's why I have drawn a blue color line here. This is a resistance line. Previously, one of the HLQ zone videos, I told you about support lines and resistance lines. You can draw and you can keep that as a target. When prices are reaching a particular, there you may not be seeing a proper zone. Even if you go to 1 minute time frame, this is the area we didn't see a proper zone. Maybe you can say this is the zone, 1 minute zone holding the prices, not letting the prices enter, but before itself, some more maybe institutions might have spread the order flow even below this leg out candle also. Maybe that is the reason why we are able to draw the resistance line here. In this resistance line, prices are reaching and again coming. See here, rally base drop and again from here it reached several times, almost 1 hour. See, this is the first time, this is the second time, this is the third time. Now itself we have to realize. Next time prices reach here, you need to book the profit. Probably somewhere here you should book the profit. Even if you miss again the last opportunity you got here. This is one way you can by seeing, because when price is struck up in one area for a long period, probably you should understand some kind of resistance is taking place at that area. Because of the resistance, it may not let the prices go. But actual reason is this 1 minute zone just before that. Maybe this is acting like a high liquidity area in this area. That way you can book the profit. Or another one who are using trailing stop loss, see, none of the 1 minute zones are violated here. See, rally base rally. It picked up the orders and again prices moved. Again drop base rally. Again it picked up the orders from this candle here in this candle. Again prices moved. Again rally base rally. Again drop base rally. Again see it picked up the orders from here and moved. But here rally base rally. Probably this is the area the first 1 minute demand zone is violated. Those who are using trailing stop loss, probably you might have booked your profit in this area. Let me draw a horizontal line. Maybe use a small buffer below that. So in this blue color line, you might have, maybe some of you might have booked the profit in the resistance area concept what we have learned earlier in HLQ zone analysis videos available. That is there in important strategies and analysis videos. And those who are using trailing stop, the below the second, the one, I'm sure the mouse is pointing, that area you might have booked the profit because here first 1 minute demand zone is violated. Got it? Anyway, I calculated up to this blue color, the resistance line, that is the area we should book our profit. And how much profit Berlasoft would have given you. And also notice here, slightly it is pierced, slightly. Of course, we will be within the stop buffer. Stop buffer will be more, will be there. But slightly pierced and moved sharply. See, after that again, this zone is completely violated. You may ask, can't we take another trade here? No, because already this zone is pierced. Once a zone is pierced, you won't take. If it is not pierced, maybe intraday you would have taken a second trade. When a zone is pierced, taking a trade from this zone is not advisable. Okay. So how much profit we would have got? Berlasoft would have given you 6,900 rupees profit until this resistance line. Maybe if it is at the 1 minute stop, 1 minute trailing stop, maybe you might have got around 6,500 rupees, something you would have got. Okay, anyway. So, and this is the one we got, 6.1% ROI we got as per one futures margin cost. Okay. Next one is continue. I told you, in the next stock I will tell how exactly we can compromise and draw the zones. Previously I explained because many new members joined and listening. Probably I thought maybe this could be again a session for them to explain. And existing people who already learned this concept, please use this as a revision for you. How we can compromise and identify the zone based on lesson 1.1. Lesson 1.1, always see my technique is always I'll first look for where prices are moving narrow range and after that imbalance is there or not. And below that leg out is the perfectly is there, okay fine, otherwise I will compromise and draw the zone. That technique clearly I am explaining, please everybody please concentrate here. So that you can see in Bajaj Finance. Bajaj Finance is a daily high liquidity supply zone. Our software identified this as a drop, one base candle and a drop candle. And this is the zone fine-tuned with 75 minutes time frame. Okay, 75 minutes time frame. Here it is like a drop candle. Here you see prices moved in a narrow range and then again a drop with hidden body. If you add the hidden body, this is a big drop candle. So I consider this as a drop base drop. See how I used, this is the area prices moved in a narrow range. Okay, within this 75 minutes area, 15 minutes, this is the very tricky. Observe carefully how I selected the 15 minute zone. Because 15 minute zone, leg out is not good. Sorry, not leg out, leg in. Leg out is perfect. Leg out is a hidden zone. The concept you learned hidden zone in your lesson 9.3 and 9.4. Those who did not learn his hidden zones concept, please complete lesson 9.3 and 9.4. Because I know some of you people learned the courses outside and now you are attending these lessons. So when you are attending these lessons, you didn't, maybe you skipped many of the earlier lessons. All the new concepts are, whatever the new concepts I developed in supply demand zone, all the concepts are starting from the phase 1 itself. Phase 1, I explained a new concept, pierced zone. And in phase 1 training in lesson trend, equal high and equal low, this is the new concept I developed. And lesson 9.3 and 9.4, you learn the hidden zones and hidden bodies. So if you don't listen those concepts, you don't really understand. You will be thinking this is a failed ERC candle. But actually, if you add the body, see here, you get a big drop candle up to here. That is sufficient enough. Very good body you are getting out of this zone, hidden zone. And this is the area I have seen prices moved in a narrow range. 1, 2, 3, 4 candles. This is moved in a narrow range. That way I have drawn this zone. Maybe I considered, see, this is not a leg-in actually. This is a base candle. But how I compromised, that is very important. Why I compromised, why I selected? See, now it is looking like a big candle, right? And here, this is the area prices moved in a narrow range, right? So that's why I selected this is the area. We can compromise and draw the zone. When you compromise and draw, if the structure is not good, that will be reflected in the 5 minutes time frame. 5 minutes anyway, we can't compromise and draw the zones. Before that, because ultimate goal is to find the institutional order flow. Sometimes before 5 minutes, the zones will be there, but they are not very clear. You might be having a dilemma whether to draw a zone or not. That's why earlier I told you a technique also. In case from top-down analysis, if you are having any confusion, start from 5 minutes, identify 5 minutes zone. Then go one time frame above, then go one time frame above. That way you draw at the time where you can compromise if there is any possibility, you can take a decision. Because this is the area prices moved in a narrow range. This is the area. So this candle is, I felt like, okay, this is a big candle. Having some, having a great body, but okay, compare it to the other candles. This is the way I have drawn the zone. 15 minutes, this is the 15-minute zone. And we have excellent leg out because this is a hidden body. Institutions are trying to hide something here. For a normal supply demand zone traders, they can't identify this zone because they are not aware of hidden body concept. But we know institutions how they are playing with us with these kind of candles. So that's why I know there is something is happening here. But really, clearly there is a 5-minute structure is here. There is a 5-minute zone, a clear zone available that you will see in 5 minutes time frame. But before fine-tuning, institutions are creating in such a way it is something. And somebody, those who wants to draw the zone, this is a drop candle. See how many base candles? 1, 2, 3, 4, 5, 6, 7. Because 7 candles, base candles are there, you will ignore this zone. But actually institutions nicely kept a 5-minute zone here. So that is the reason why instead of considering this, I considered this as a leg-in. Why I considered? Because this is the area prices moved in a narrow range. That is the first point. Second point, institutions trying to hide the candle. This candle. Because this is not a this is not looking like a drop candle. Without hidden body. Without hidden body, it is not looking like a drop. It is looking like a big base candle. Many people are not aware of failed ERC candle in supply demand zone, price action trading. Many people are not aware of failed ERC candle concept. They are not aware. But you already learned in lesson 1.2 itself, you learned failed ERC candles concept. And moreover, in lesson 9.3 and 9.4, you learn hidden body and hidden zones concept. So that way we are seeing, we have an excellent leg out structure with hidden body. And we have earlier price moved in a narrow range within this area. So that way, this is the 15-minute zone. Actually, I compromised and I have drawn. The reason is I already seen there is a 5-minute structure here. We have excellent 75-minute structure. We have an excellent daily structure. We have an excellent 5-minute structure. Only 15-minute structure is somewhat giving confusion to us. So that's why compromise and draw on the 15-minute zone. Of course, sometimes when you compromise and draw, there are times your zones will be violated. Maybe our identification is not proper. So that's why always remember lesson 1 concept, lesson 1.1. Prices will be moving in a narrow range, then imbalance is taking place. If that is the area you can identify properly, before leg-in structure not proper also, you can compromise and draw the zone. This is the simple technique. Your lesson 1.1 and lesson 2 combined together, I am taking this decision, nothing. You already learned these concepts. But how we are combining these concepts? That is our practical, real practical. That is the area experience is required. That experience only I am sharing with you guys. But remember, if you don't properly compromise and draw the zone, your trades will be stopped out. That's why be careful. Or if you have a doubt, just ignore it. Even if you ignore this stock, nothing problem. No problem at all. You would have got a good trades from the other. See, next you will be learning Syngene. It gave excellent 2 trades today. Quick trades, very good profits. But why I am teaching you this is, at some point of time, you have to gain this kind of experience. I am not suggesting you to start doing all these things, practicing from today onwards. No, just observe some time until you get experience. Everyday HLQ analysis videos, time to time, I am going to explain these kind of concepts to you. Observe some days. Then proper thoughts will be developed in your mind. At the time you start planning your trades accordingly. Okay, why I have given importance? Now look into 5 minutes, you will get clarity. See, 5 minutes we have excellent. Let me hide this candle. So this is a rally candle. Next you have a base candle. And then with pro gap, with a drop candle and hidden body, pro gap, everything. Excellent drop candle. When you have this kind of excellent structure, obviously we don't want to miss such kind of trades. See what happened today? Prices entered into the zone. And here you have gap is there, gap area. Actually 15-minute structure is also not good. See here, this is a rally based drop. We want rally candle, right? But go to 75, you will get clarity. You have a rally candle, 4 base candles. Or you can consider this as a drop candle, 3 base candles, and add the hidden body here. Then it is a rally candle, big candle, rally, big body. And of course, wick is also there. It's a large candle. That means actually the 75 minutes pro gap, this is the 75 minutes zone pro gap. That is the reason why a lot of order flow might be here. So that's why in the gap area, when there is a pro gap, the gap area will be your target. See how I analyzed the chart. That is important. First I looked into the 15 minutes. 15 minutes gap is not there. You have a doubt whether really there is no proper zone. Maybe prices will come down. You may think. Maybe actually it came down. But that is at the end of the market hours. But before that, this is the area you may see not clarity is there. That's why what I did, I went to 75 minutes. Want to see when is 75 minutes pro gap. So we have a drop, 3 base candles. Here we have a with hidden body, there is a rally candle. Maybe this is a 75 minute zone. That way we can understand. So that's why I decided this is the gap area. Actually, you need not do this much deep analysis. When there is a huge gap, probably that is the area you keep and you book the profit. And another thing is, we already have 1:3.5 RR till the gap area. If you are looking for 15 minutes target, 15 minutes target will be somewhere here. Till here there is no proper 15 minute structure. But if you go to 75 minutes, clearly drop, base, rally is there with hidden body. That's why I am giving importance to this gap area. Okay. See, this is the morning 9:15 candle. And this gap is very, very critical. We don't know, this gap might be hidden order flow. See, the first prices reached this gap area and again see how it pushed. Of course, again it came down. Maybe supply is very strong, came down. Sometimes what will happen? Prices will go up and this zone will be violated. So that's why you can't, we can't predict what is going to happen, whether it is going down or it will go up, we know. But once it reached the target, just book the profit. That's it. And already we got good RR also. Till the pro gap, we got 1:3.5 RR is there. You may ask a question, is it a morning 9:15 candle trade? No. See, already next candle, 9:20 candle also we got. But go to 1 minute, you will get clarity when actually you got the trade. So this is morning 9:15 candle. This is 9:16. This is 9:17. 9:18 candle you got the trade. And again 9:21 candle also you got the trade. Prices entered. So there is no question of missing this trade. But the only thing you might have missed is, because 15-minute structure is not good, you might have avoided fine-tuning the zone. That way, you might have stopped your analysis at 15 minutes time frame. But Bajaj Finance gave a very good trade. Just I want to know if anybody, because some of you already learned compromising the, how to draw by compromising the leg in and draw the zone. Some of you already learned in the earlier. So I want to know if anybody took Bajaj Finance trade, please put in the comment section that you took the trade. At least I know who are all actually got earlier concepts learned properly and implementing. Okay, Bajaj Finance, how much profit it has given? Bajaj Finance has given 12,550 rupees profit, which is 7.3% ROI as per one futures margin cost. Maybe 1,70,000 something is there. That's why ROI is reduced. Profit is looking more, but ROI is reduced because of more investment. See, next one, Syngene, it gave two trades. 7% ROI, because here the future ROI is margin cost is less here. That's why you got a better ROI. Your investment is maybe 1 lakh or 1,10,000. That's it. So you got more profit. Okay, this is Bajaj Finance, and next one is Syngene. This is 75 minutes demand zone. Did you notice actually one point? Today, Nifty is down around 180 points, or at some point maybe almost 200 plus points it is down. Even then, demand zones worked very well today. Berlasoft you have seen earlier, it's a demand zone trade, long trade. Syngene, two trades it gave. Okay, it is a 75 minutes high liquidity zone, Syngene. How our software identified this? As a drop, 1, 2, 3, 4 base candles and a rally. This is how it is identified, and fine-tuned this 75 with 15 minutes time frame. Here drop, base, rally is there. See, from the same area again, drop, base, rally, LOTL 15 minute zones. So the main origin is this is the one, drop, base, rally and follow through. And also here in the recent price action, did you observe here? It created a drop, base, rally and follow through candles. This is at the distal line, overlapped at the distal line. Sorry, proximal line. Because you learned, you will be having zones overlapped at the proximal line, overlapped at the distal line, or zones will be there in the middle of the zone, inside the zone. So this is the scenario, overlapped at the proximal line, drop, base, rally, follow through candle. Okay. And also, if you observe, this is a high liquidity zone. Again, you see drop, base, rally created. The 15-minute zone is a high liquidity area, rally, not drop, rally, base, rally again. But the origin, drop, base, rally. The one I didn't consider, this outside one, it is completely going outside the zone. Completely outside the zone, taking trades is quite risky. If it is overlapped, okay. But completely going out is dangerous. Sometimes it may work, sometimes it may not work. Now, this is the high liquidity area. So in this area, overlapped at the proximal line or overlapped at the distal line or exactly in the middle, we can plan trades. Going completely outside the zone and planning trades is not advisable. Okay, anyway, this is the 15-minute zone, drop base, rally and follow through. Within that area, go to the 5 minutes time frame. See, within that area, if you notice here, this is exactly proximal line of the daily zone. In the proximal line, in the middle, it is overlapped rally, base, rally. This could be a high liquidity zone. Why? See here, drop base rally. It is tested, but a drop base rally. Again it is tested, a drop base rally. It is also today also looking like a drop base rally, but don't consider this as a base. This is a failed ERC. So this 5-minute zone is not only a fine-tuned zone, it is a high liquidity zone. Could be high liquidity. 80% scenarios we can guess. It could be high liquidity. See, today morning what happened? Prices. This is yesterday. Yesterday's candle. See, already tested first time, second time, yesterday third time. The last hour, see how sharply it gave. And today morning 9:15 candle. See, earlier there was a 15 minutes. See, this is a 15-minute zone. If you look into the 15 minutes, rally base drop. Today morning, this zone is completely order flow is gone. This 15 minutes. A little above, there is one more 15-minute zone here. So I thought this is the right area to target because this is already gone. And moreover, this is the area already tested once. Today again tested, maybe this is acting as a high liquidity zone. Anyway, you got the trade here at what? Morning? 9:25 minutes candle you got. And when it reached the target, 9:35 minutes. 15 minutes, your trade is completed. It reached the 15 minutes target. In 15 minutes. In 15 minutes, how much profit it gave you? 8,850 rupees, which is 7% ROI as per one futures margin cost. 8,850 rupees profit. In just 15 minutes. And again you got a second trade. When? At 10:20. And reached the target. When it reached the target? 12:10. Or you can say 12:20 approximately. 2 hours. See, morning 9:20, it took 15 minutes to give you the profit. Same profit at 10:20 trade, it took 2 hours time to give you the profit. Why? Because morning volatility is very high. Any profits or losses very quickly you will get in the morning time. Especially morning first half an hour or 45 minutes trading session. So this is the way Syngene has given you 2 successful trades. This is the high liquidity zone. This fine-tuned 5-minute zone is a high liquidity zone. Okay. So each trade from the same zone, from the same target, it gave you. See, second time actually it is even violated the zone. Give more, but anyway, you can't wait this much time. You never know what is going to happen. Okay. So apart from that, a few other stocks. So there is one stock. If anybody would have taken there is a high liquidity zone. Already gave a trade earlier. If anybody would have taken a trade today, maybe your order would have been stopped out. So what is that stock? I forgot the name, but anyway, we'll get into that. First, let me show you one by one. First one is MGL. Because I'm recording very late today, I may not be in a position to explain fine tuning all these zones. This is a daily zone. Today just touched the, but not the fine tuned area, MGL and PEL. PEL, it entered into this 75-minute zone. Prices moved up, but we didn't take a plan a trade because 15-minute structure is not good. So here, even to compromise and draw the zone, we don't have any proper leg out structure here. So that's why I left this. But here a 5-minute horizon is there. This 5-minute horizon, we can plan the trade. Go to 5 minutes in MGL, you can find a 5-minute horizon here. You please do this work. Go and observe in your chart. And next one is a Titan. This is a daily high liquidity zone. This zone is somewhere in the year 2023. We don't have 5 minutes data, but until 15 minutes I fine tuned. This is the 15-minute zone. But anyway, we didn't get any trade, and also we can't plan. In the recent price action also, there were no proper 75-minute zone here. It is there, drop base rally, but almost the zone is outside the zone. Within the area, no fine-tuned 5 minutes, so I left this. Bajaj Finance we discussed, and REC Limited, one important learning here. REC Limited. Did you notice REC Limited today there is a dividend adjustment? Always focus on this. TradingView update dividend adjustment late. Sometimes more than 24 hours time it will take. At US timings they will update. See, even now it is not updated. This is the zone drawn previously. This previously drawn zone, in the fine-tuned area, we got a trade when Tuesday, that is yesterday, in the fine-tuned 5 minutes area. Is it there in our Excel sheet? Yeah, REC Limited. Yesterday it gave 2 trades. This is the first trade and this is the second trade. So this is the one we fine-tuned. But see how much dividend adjustment took place today? 3 rupees 60 paisa. That means 3 rupees 60 paisa, prices should go down. That way we might have got an entry also today. But actually I measured manually, price did not reach to this fine-tuned area. That means this entire zone we have to redraw once again. Once TradingView updated the data in their chart, we have to redraw. So that's why whenever there are dividend adjustment on your trading day, be careful, especially with TradingView. TradingView is updating in their American timings, they are updating once the trading starts. This is the only one major disadvantage I have seen with TradingView. We have a high liquidity zone, stocks near the zone, but that day dividend adjustment will be there. Because the data is not adjusted so far, your analysis, what you did in the analysis is wrong. Because all prices will go down, 3 rupees it will go down because we are deducting 3 rupees 60 paisa. So 3 rupees 60 paisa equivalent ratio will be deducted from all these candles. That way all the candles prices will come down, prices will go down. But this is today's price, this remains same. It won't be affected. All previous candles. Let us assume when the zone is coming down, there are higher chances this zone may give you a trade. Yesterday while prices are going down, if any newly created zones are there, you will be missing. But anyway, today there is no newly created zone here yesterday. But sometimes some other stocks, you may miss the opportunities. This is one important learning you should observe. REC Limited. Okay, next one is Bank of Baroda. This is a 75 minutes. Yeah, this is the one I was referring earlier. See, rally base rally. This one is fine-tuned with 15-minute zone. So here rally base rally. This is the 15-minute zone. Within 15-minute zone, we have identified a 5-minute zone here. In the 5 minutes, you have rally, base, rally. Rally, base, rally. And this fine-tuned 5 minutes area already prices entered. It is a tested zone. See, this zone is tested. Moreover, prices went deep, a little deep. So that's why we know this zone will be violated. Actually, the point I want to tell you, explain not on this stock, some other stock. Okay, anyway, this zone we know this will be violated. One reason, prices went deep. Second, it is already tested. So today, see, easily zone is violated. Lesson 16 concept. When a zone can be violated, you land. That way, we know well in advance this is going to be violated. That is what happened. The whole zone is gone. Next one is Havels. This is a 75-minute zone. Rally, base, rally. At the distal line, we have a fine-tuned 5-minute zone. At the distal line, please do the calculation. And before that, there is no proper structure here. Here only you have rally, base, rally, follow through candle, 15-minute zone. Inside you have a fine-tuned 5-minute zone. From there it picked up the orders and priced. So that is the area we want to plan our trade. But anyway, today prices did not reach. Next one is LIC. This is a 75 minutes demand zone. LIC is also having two order flows. One is in the middle. Here we have a fine-tuned 5-minute zone. At the distal line also we have a fine-tuned 5-minute zone. But anyway, we didn't get any trade today. Next one is Prestige. Prestige, see the last half an hour, this zone is violated. See, we have drawn a 15-minute zone, Prestige. First, let me show you. We have an excellent 15-minute zone. See here, we have a drop, 3 base candles, rally. Excellent, right? But go to 5 minutes. This is a drop candle, this is a rally candle, in between no base candles. We know this will be violated easily. See, that is what happened today. Easily this area is violated. But here identified a 5-minute zone. See, here we have a rally failed. Here says a rally, 1, 2, 3, 4, 5 base candles and a rally. And this is the area is acting as a horizon for this entire 75 minutes. See, it picked up the orders and moved up. So this is the area we want to plan our trade, actually. Actually, that area prices entered today. When it entered at 3 o'clock, the last half an hour of the market closing. Anyway, last half an hour we don't consider. See, for some time, this is a hold at the prices. If you would have drawn, for risk management point of view, if you would have fine-tuned this zone up to type 2 proximal, you would have got a trade and it would have given you 1:3 RR. Let me show you. See, 1:3 RR. 1:3.7, maybe a little above. Okay. You got a very good RR, it would have given you. Could have been a successful trade. After that, it is violated. But anyway, at 3 o'clock, we can't consider. But the point you have to understand, the origin. So this is the origin for this entire. This is type 1 proximal. See, origin always I draw type 1 proximal point of view. But trade planning point of view, you may take type 1 entry or you may take type 2 entry or you may fine tune this zone and take the entry. That's up to you. That's all depending on risk management. Type 2 entry, it gave you 1:3 RR. Type 1 entry, maybe it might have given you 1:1 RR. But anyway, it is last half an hour, so we ignore this. Next one is Supreme Industries. Supreme Industries is a 75 minutes zone. Rally, base rally. If you want to fine tune with 15 minutes, see the 15 minute structure is not good here. Drop candle, rally candle. But what happened in the recent time, when prices entered, you see rally, base, rally, overlapped at the proximal line of the 75 minute zone. But fine tuned zone went, 5 minute zone went completely outside the zone. See rally, base, rally, it is outside the zone. Outside the zone, taking trades is risky. Sometimes it may work, sometimes it may not work. See here, pierced when Tuesday. Yesterday, maybe if anybody would have taken a trade yesterday in this, it will be within the stop buffer. You would have got a successful trade, good trade. But there is no guarantee. Sometimes these zones will outside the zone, because liquidity should be either overlap at the proximal of the 75, the fine-tuned 5-minute zone. That is what we have seen in Syngene, right? But this stock completely outside. So planning such kind of trades are risky. Sometimes entry buffers may work. We have dynamic entry buffers, but that is a different concept. That will be there from the beginning of the zone. But anyway, this is pierced. You can't plan any trade again further. Actually today morning 9:15, see it picked up and moved up actually today morning, but it is a 9:15 candle. Even you can't consider the trade. One is it is a 9:15 1 minute candle. Second, this zone is already pierced. And third reason is it is outside the zone. This fine-tuned zone is completely outside 75 minute zone. So just I want to show you why we don't give you preference to these kind of fine-tuned. At least it should overlap at the proximal line of 75 minute zone. This fine-tuned 5 minute zone should overlap. A part should be outside, a part should be inside. We would have given weightage to this particular 5 minutes. But anyway, this is gone yesterday itself. And we don't have any more other fine-tuned zones inside the zone. And next one is Tata Communication. We have a fine-tuned zone, but anyway, prices did not enter. Tata Communication, this is a 75 minute zone. This is a rally candle, not a failed ERC at the hidden body. This is a rally candle. And these base candles and rally. So these are the high liquidity zones identified in our previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.